Hello, welcome to question number 3 of February-March 2023, paper 2.2. The reference is given above. If you're finding these useful, make sure you send this to your friends. If you have any friends, prove it. Prove it by sending this video to them. Okay. Lucas is a trader. He has provided the following information. Balances at 1st January 2023. There are some opening balances on SLCA, Sales Ledger Control Account, PLCA, Purchase Ledger Control Account. The way I look at them is this is our trade receivables. Okay. This is the way I look at them. And that's your trade payables. Okay. So if you look at it this way, it's going to make it much easier to deal with. Okay. So we have a debit balance on the SLCA, Sales Ledger Control Account, of 14,940. Obviously on the debit side, because it's an asset, it's a receivable. So 14,940. 14,940 on the debit side, and that's your balance brought down on which date? That's 2023 January 1, 2023 January 1st. Okay. For now, let's just keep our focus on the SLCA. So we will be targeting sales. No, that doesn't go. Cash sales is ignored. It's the trade receivables. So how does cash sales affect the receivables? It doesn't, right? Only the credit sales affect your trade receivables. Cash sales, double entry would be sales credit, cash debit, and we're done. Okay. Credit purchases, that's with the PLCA, so we ignore that for now. Returns to credit suppliers, again PLCA. If you want, actually, you can put S and P for labeling. So that's SLCA, that's PLCA, that's PLCA, that's SLCA, that's SLCA. Anything about your customers, that's SLCA, PLCA. Recall these are always with your receivables, not with your payables. Discount received, of course, with your suppliers, with payables. When you pay something, you receive a discount. Contra entries with both, right? P and S, both of them. We'll talk about this later. Interest charged on overdue purchase ledger control account. So obviously that's just your PLCA. That way, I think it's a very easy question to deal with. Okay, so we've put the opening balance 14,940 on 1st January. What happened during the year, or let's say until the end of the year, end of the month? Sorry, what happened during the month is given as follows. We have credit sales, and that will increase your receivables, isn't it? Your sales will increase your receivables. Okay, I'm gonna put 31st because that happened during the year, during the month. Okay, sales will be debited by 12,736. 12,736. Fine. What else affects your SLCA? We've taken that. Let's just put a tick. Returns from credit customers will be opposite. 920 will be credited. 920 2023 January 31st. That is your sales returns. Why do we credit this? Because sales returns will reduce your receivables. You're not going to receive this amount anymore, so it reduces your receivables. Fine. Let's move on. Dealt with this. Cash received from credit customers. Cash received from credit customers will also reduce your receivables. One way to think of this is cash will be debited and credit customers' accounts will be credited. So cash debited, credit customers credit. It reduces your receivables. 685. 685 cash. All right. Let's move on. Dealt with this. Bank transfers from credit customers. So some of the credit customers paid by cash, some paid by bank. 10,620. Again, your receivables will go down. We put bank over there. Fine, let's move on. 10,620. Next one is irrecoverable debts. You see how it makes it easy for us? Now we don't have to look at every line again and again. We just know where the S's are and where the P's are. Irrecoverable debts, that will also reduce your receivables. So 140 will be credited, 140 irrecoverable, right? Irrecoverable. Previously known as bad debts, okay? Irrecoverable debts. Okay. 140. Did we copy the amount? Yes, we did. Next, contra entries. Now remember, contra entries is where one person is selling and buying from this from the same person. And so what you do is you set off a specific amount, like you don't pay that and you don't receive that. In this case, the contra entry is 180, means you don't pay 180 and you don't receive that 180. It means your payables go down and your receivables go down. So it'll be credit entry 180, and it's always going to be credit entry in your SLCA, because contra means you don't have to pay that, you won't receive that anymore, and you won't even pay that anymore. Okay, so we can just say PLCA, and in the bracket you may mention it's contra, all right, or set off, or whatever you like to put. Set off, contra, PLCA, set off. Different ways to indicate what you're doing. Okay, although the double entry is going to be in PLCA. Fine. I think we've dealt with everything. How many marks is that? How much marks? 6. Not bad at all. Most likely the balance will be on the debit side. That's where it's supposed to end up. But still, just leave a line under, both of them. You never know where it goes. So, firstly, let's add up the debit side. 14,940 plus 12,736. That's 27,676. 27,676. Add up the credit side, 920 plus 685 plus 10,620 plus 140 plus 180. Okay, that's 12,545, 12,545. The smaller side is the credit one, so 27,676 minus 12,545, 15,131. 15,131 is your balance carried down. Okay, your balance brought down. Are we supposed to balance this? Let me just confirm. Oh yes, balance account, bring down the balance on 1st February 2023, February 1. Okay, the totals column. Before we do that, let's put that 15131, and in the totals column you just put the bigger amount, 27676. 27676. Okay, let's move on. We've dealt with the first requirement. Now looking at the second one, PLCA. It has an opening credit balance of 8450. 8450. Let's call that balance brought down on January 1st, 2023. Okay. What happened? Credit purchases. When you make purchases, your liabilities go up, your payables go up. Look at it as a trade payable. Payables go up, 7325 will be credited. Okay, because payables go up. You can say purchases. And that happened during the year, so just put the last date. During the month, I keep saying the year. Okay, taken. Returns, it's just the opposite of purchases, so 463 will end up there. 463, 2023, January 31st. That's your purchases return. Okay, write the full thing in the exam. Okay, no shortcuts, no short forms. Next, just jump to this one. Bank payments to credit suppliers. Imagine paying to your suppliers. That will reduce your liability. When liabilities reduce, they are debited. 6675. 6675. We paid through bank. Obviously, the bank will be credited because we're paying. We're not receiving, we're paying. And so bank will be credit and this account will be debit. That's one way to look at it. Okay, let's move on. Next, discount received. When you receive discount, you don't have to pay that. Means you received, like you were forgiven of that amount. You don't have to pay that. 210 discount received will be debited. That reduces your payables. That's your discount received. right? Next, contra entry will also reduce your payables 180. We discussed this earlier. We can say SLCA contra. All right. Now, interest charged on overdue purchases ledger accounts. You didn't pay on time, now you have to pay interest. And that's a payable, increase your payables. So credited 166. Is that the right amount? Yes. Interest charge. Okay. Interest charge. Fine. All we have to now do is just balance this. Out of the credit side first, or debit side is up to you. 8450 plus 7325 plus 166, 15941. We're expecting a credit balance, of course, because it's a payables account. 463 plus 6675 plus 210 plus 180. That's 7528, 7528. And the difference, 15941 minus 7528 is 8413. 8413. 8413. Put Feb 1 there. 2023. Call that balance brought down. That's your balance carried down. On the last date, we've already put that above. Of course, you also put the totals. 15941. Okay. Let's move on. That's a lot of marks. 7 plus 6, 13 marks for two of those. Easy. State two advantages of preparing control accounts. Well, we can say they provide totals for trade receivables and trade payable totals. Okay. Useful in preparing financial statements. You get it? Of course, write it completely nicely. Trade receivables and trade payables totals are useful in preparation of financial statements. So they help us in finding these totals, right? Another one we can say it helps locating errors, right? Because you can essentially reconcile, let's say, with your, or you can just say it validates, it confirms or reconciles. Okay, it can reconcile. It can reconcile, or it can be used to reconcile with sales and purchases ledgers, locating errors, right? Helps in locating or locate errors, right? I'm just giving you the keywords here. Of course, you can look up your book again, see what's written there for advantages of preparing control accounts. There are more, right? It helps reduce fraud because, again, you can compare your sales and purchase individual ledgers, individual account totals with the control accounts. And so if there's any fraud taking place, you can, even catch a fraud, right? So it helps reduce fraud, and it helps locating errors, helps in preparation of financial statements. It's just theoretical. It's repeated, right? Just memorize it from the book, not from here. I suggest go to the book, memorize all the points, so at least you retain 2 or 3 of them. Okay, let's move on. One of Lucas' suppliers has demanded immediate payment of $3,900 due to him. Lucas does not have sufficient cash to pay this amount. He's considering selling some office equipment which cost $600 and has been fully depreciated. Lucas has been offered $2,500 cash for this equipment. The question is whether he should sell his office equipment in order to pay the supplier. So we can look at it in 2 perspectives. Sell, right? Some points supporting the selling and some points against selling, right? So points supporting sell would be, well, we can say money will be raised for payment. for payment. However, it may not be enough. However, it is not the full amount, right? It is not. Oh, he's considering selling that equipment. Yeah, but still we can mention it's not the full amount. So he will still need some other source unless he have cash for the rest of it, right? So money will be raised for payment. However, it's not the full amount required, right? We can say required. So actually that's 2 points. I think that's already 2 points. That's one for selling, and like, why is that a problem? So why we shouldn't sell actually. So money will be raised for payment. However, it is not the full amount. Another reason for selling, the machine maybe, right? We don't know. Assumption. Exhausted given the full depreciation, right? So if it is fully, oh wait, it's not typing anymore. Just a second. Exhausted. Given the full depreciation taken, or it's already fully depreciated, given the fact that it's fully depreciated. So it may be fully exhausted. So 2,500 may be a good deal, right? It may be a good deal. We don't know all the facts, but we'll use our assumptions, assuming that this 25 may be a good deal. Right? We may not get a better one, and this machine may not be that useful to us because it's fully depreciated. It doesn't necessarily mean that fully depreciated on the book means it's useless. All right. So these are just 2 points for selling. Oh, and also, it will avoid conflict, right, with supplier, isn't it? Supplier. And of course, on that you can build upon that point. You can say conflict supplier, or we can say a relationship will be deteriorated with the supplier. It will damage relationship, or let's say it will maintain relationship with supplier if we pay on time. So that's one point you can mention. Okay, and not sell. Again, you can say amount is not enough. The point you used above. Okay, it's not raising the full amount. Okay. Secondly, we can say the equipment may be necessary to run business, right? To run business. Okay. We may not have resources to replace them, right? Or to replace it. Even if it is fully depreciated, it may still be useful. It's depreciated on the book. The physical equipment is still there, it exists. So we may not have resources to replace it. What else can we say? Yeah, I think these 2 points are good enough, to be honest. And of course, build upon that, right? Don't just leave it to that. Make sure you build a nice sentence out of it. And of course, then finally, your conclusion. What do you think? What do you think should be done? Should we sell it or should we not sell it? I would say consider other sources of raising finance, perhaps get a loan, right? Because it's not sustainable. If you sell a machinery today, what will you do tomorrow, right? Sell the rest of the business? Of course, that's not sustainable. So better get some sort of a loan, because this supplier needs a immediate payment. The rest don't. So just get a short-term loan or something, pay that supplier, maintain the relationship, and keep your equipment, which may be necessary. Again, you should use the word maybe, because we don't know all the facts, right? In these type of questions, you guys are creative. I just came up with these 4 points for 4 marks, and then one conclusion, that's 5 marks. But pretty sure you guys are coming up with some really good points. Use them, all right? The reasons for selling and the reasons for not selling, and then your conclusion. Just be creative with it. These are logical questions. You don't need to be an accountant for these. That's 20 marks. Okay. Question number 3 done. See you in the next one.